Hello, everybody. Happy Thursday, and welcome to another episode of Gold Rush. I am Sam Gatlin, and I'm joined today, as always, by Mr. Jason Pers, who's
Hey
making
everyone.
moves out here, absolutely putting up a banner year for his fund. And it's in large part thanks to precious metals, which have been amazing this year. So we'll talk to you about the current state of affairs there in precious metals. We also have a lot more to get to, though. We have some macro charts, some base and industrial metals, and of course, energy. We can't help ourselves, Jason. Energy just continues to not work, but the setup is there. It looks really nice, and I think a big move is coming eventually for energy. I see we have some action in the YouTube chat today. We have the risky business. We have Brett Mead in the house. Shout out Kansas, 50 to 60 degree, 50 to 60 mile per hour gust winds today. That's exactly right. I am back in the great state of Kansas. I went out for a walk earlier this morning and my hair was all poofed up. It was really bad. It was so windy. I was worried I would just get blown away. So, yeah, I don't miss. During my time in Europe, I didn't experience any 50 or 60 mile per hour winds. So, that is certainly something that Kansas is known for, though. We also have Mark Primer in the chat. We have the Yako, the goat. Nice name. Okay. Everybody, thank you for being here. If you like this show, go ahead and give it a like and subscribe to our channel so we can keep bringing more awesome content to you in the future because we love doing this. We love talking markets. We have so many thoughts to share with you. We could do this all day long. So without further ado, Mr. Gene Gote, if you will, my main man, throw up slide number 2. I think this is how we need to start today's conversation, Jason, with the Wisdom Tree Emerging Market Currencies ETF, CEW, which is breaking out to the highest level since 2018. You've been pounding the table on the weaker dollar, and boy, have you been proven right. You're not seeing multi-year lows in the Dixie, the US dollar index, quite yet, but man, I don't know. This is a good question. Would you say emerging market currencies ripping higher is more important than the US dollar index? What do you think about that? I've never really asked myself that question.
Yeah, so I've thought about it just because it's something that's come up a couple times. People do have asked me that question over the years. And when I think about it, I always think the emerging, like it's kind of like if I look globally and I'm like, okay, market stocks are ripping. That's telling me more data than US stocks are ripping, for example. That's telling me there's some global type of environment that's actually moving upwards and putting pressure on all stocks across the board. So breadth is even better. And so if we're looking also at emerging market currencies, there's a lot more emerging market currencies than in the Dixie index. So I do think that it's very important, and also it's very cyclical. You never have seen this index in a strong uptrend, or look at any emerging market currencies. You've never seen them in a strong uptrend during a strong dollar cycle. It's never happened. So, this is significant. I don't know which one is more significant, so to speak, but I think for me, I equally weight them, and just understand that money is obviously flowing outside of dollars into emerging markets. And not to mention, like when we talk about emerging markets, we're also talking about like things like China. And once again, most people wouldn't say that's an emerging market anymore, but it's still listed in the emerging market currencies and the emerging market funds. So, as that's the case, we're also looking at some of these major currencies that really do matter quite a bit inside of this ETF or inside of the emerging market forex markets. So I do think that this is significant. This is a big move. And I think it's going to look like the dollar. Like I think this is going to hit its highest high since 2018. The dollar is going to start hitting a lower low pretty soon. And that's going to be a situation that everybody starts panicking about at some point. I think the dollar's heading to 90. I've had that thought the whole time. I still think it's there. I saw Mish posted the same thing, which I love when Mish and I are on the same side on a trade because she is one of the smartest minds in finance. well, a person I learned a lot for. It took a lot of time with me to help me learn how to trade futures when I started my own fund back in the day. So she was great, and not to mention her being on that side. She's been trading a long time, since trading since the '80s on the floors, watching these markets, watching the macro market. So I do think, like, put that all together, I think the dollar's headed lower.
Totally. And you can tell in the precious metals, they love this action. If you look at something like Peru, absolutely screaming higher after it resolved a massive base earlier this year. So, yeah, there's a lot of intermarket evidence that suggests that this weaker dollar is here to stay. And investors love that. And, Jason, one thing that investors don't love right now is crude oil. Crude oil is making new multi-year lows here, but I don't know if it's going to stick. I mean, for one, you don't have tremendous downside momentum. It's kind of been a sold out downtrend for quite some time now. So granted, the price is the only thing that matters, but I don't really have much conviction in trading crude oil from the short side. This is not a product I want to be short. I know your fund is very much systematic, and if it's making new lows, you're going to be short no matter what. But me, more as a discretionary trader, it's not something I want to short, and especially when you see this divergence with the 30-year yield. You have the US 30-year yield pushing up against new cycle highs, and if you look around the world, somewhere like Germany, which has been an amazing leading indicator for the US, it's making new multi-decade highs for that 30-year yield in Germany.
Yeah, I think oil's gonna surprise a lot of people. I still think that that's the case. Like for me, I'm always waiting on closes, but here's the other thing. The close on the futures contract. So I'm not trading the front month future. That's like, basically gambling in a sense. Like it's gonna expire soon. Who knows what exactly is going to happen? Futures traders, for the most part, unless you're day trading, aren't going to trade the front month future most of the time. If you go out into March, where I'm looking currently, you're seeing that there is no new lows on the crude oil trade. So if you look at CL, you look at the March contract, February contract, what that tells you is that there's some supply tightness out there, which is very interesting, something that's the opposite of the narrative out there. So, if you follow guys like Josh Young or any of the other oil guys, they'll tell you that we actually are not in a supply, we're not in an oversupply period currently. A lot of people think we're in an oversupply period for oil. Not to mention, Donald Trump gets on TV, says, "Drill, baby, drill. I want gasoline under $2." At the same time, he wants to run it hot. Like the guy wants to run it hot. Like, let's be honest. Like, come on, guys. It doesn't matter what's going on with crude oil. Let's put crude oil out of your mind currently. But just think about if somebody came out there and he was like, "Okay, I'm going to get rid of Fed chairs until we lower rates to the levels I need them to." If somebody's then like, "I'm going to give out stimulus checks at some point." If somebody then is like 50-year mortgage rates, that sounds great. What is that all? That's liquidity. That would add to inflation. So if we're adding to inflation at some point, this chart is going to look very different than it looks today. And not to mention globally, we're also seeing like the if we're looking at Brent or any of these other oil markets, you're seeing they're actually shaping up a little bit better than the U.S. market currently. So continue to look around, continue to look at like things like heating oil not making a new low and all these things. Like it's definitely a setup here for energy if I've ever seen one, and we're getting into a strong seasonal period. Once again, like if we close, I think it was below, I think it was 57.33. If we close below there, like my fund will probably go short it. However, I don't see a weekly close coming. It seems like it started to bounce the second, it sold off really hard this
You put
week.
in a monster bullish engulfing candlestick yesterday, right at that former support. It was exactly how you draw it up in the textbooks, Jason. So yeah, the buyers certainly are stepping in here. And like I mentioned, it's just a really tough trade to have conviction into the downside because I think the risk very much is to the upside with crude oil. And then on the flip side of things, a product that has been suggesting that higher yields are coming is copper futures. Jason, I don't know how long I've been saying this, maybe a year now at this point, that I think we're going to see $10 copper and 10% 10-year yields before long. I continue to believe that. The market keeps proving me right, and copper's ripping to new all-time highs. So when moon yields
Yeah, I think yields. I thought you were asking a question, Sam. Sorry, I'm very old. When moon. Just sometimes I'm like, when is the moon, Sam? You tell me. No. Anyways, so when we're looking at this chart, we're kind of looking at like copper, and Sam and I have talked about this a bunch, and I think Wavy also mentioned this too, is 10 and 10. I do think 10 and 10 is a possibility at some point. That's going to be really freaky for a lot of people to hear, but I do think like these are going to follow each other, and the reason why I brought both of these charts is like, okay, we're looking at oil is massively diverging from the 30-year yield. But then if we take a look at copper is moving up nicely and really kind of walking in lockstep with the 30-year yield currently. So I think the 30-year yield is going to follow it. Sam and I have highlighted Germany, talking about that hitting new highs. Great Britain hit some new highs. Japan's at all-time highs in yields. This is a time to kind of look at it and go, I do think yields are going to continue to move higher. And I've never seen an environment, and once again, never say never in markets because anything can always happen, but I have not seen an environment in the past that crude oil has been in a downtrend while yields continue to break out and move higher. Usually they catch up to each other. It doesn't, like, look at this chart. It doesn't mean it's always going to be in lockstep. They're going to diverge at certain times, but usually one catches up to the other. I think copper is kind of telling you the real direction of all these things, but we really need to see crude oil get above. I think it was 77.50 was the number I had for a 52-week high. Get around that zone. I think it's a really good time to start buying crude oil, but the energy stocks already look better than crude oil by quite a bit.
Hey, don't spoil it, Jason. We have some charts to get to
Okay,
later in the
just
show.
kidding.
All
Just
right.
kidding. Let's move on.
We have Ad Merp in the chat says Rock Chalk. That's right, Rock Chalk. Been a tough season so far. Football certainly was not very good. So yeah, I'm still rock chalking it up though. Mark Noller says 10% tenure. No way. I
That
don't
rem-
know, Mark.
that
Crazier
reminds
things
me
have
of
happened.
so here's a funny one. So I had people literally leave the fund when I shorted bonds in 2020. Everybody thought I was insane. I mean, literally, like people were like, "You're nuts! Like, never short the bond market. Like that, you just don't do that. You're crazy." And so, like, and I've also was the guy who was long JGBs at certain points in my career. So people also liked the fund because I was long a lot of these bonds. And then when I flipped short on the bonds in 2020, everybody was like, "This is impossible. We're never going to see this move. Yields can't get to 3%. The whole economy would collapse." Like now they're at five. Like, so like once again, it's a follow the trends. Like that's the hardest thing to do as a trader is just to shut up and follow the trends. I don't know the exact target. I do not know if we will hit $10. I do know that most of the evidence is saying yields will go higher, and the bond prices will continue to go lower. So things like TLT will continue to go lower. So I just stick to that for now. And that's kind of the way to look at the markets currently.
Totally, yeah. All right, Jason, let's talk precious metals because man, precious metals are ripping. You're seeing gold futures press against new all-time highs. And this is by and large thanks to easy monetary policy. You're seeing a massive bull steepener. The 10-year minus the 2-year yield is how we look at that yield curve. That, you can see this has been a really, really powerful signal for gold futures historically. And looking at this chart, it's coming off of such depressed levels that it has a long ways to go to get back to like the great financial crisis peak or the early 2000s. So I think this is a major tailwind for gold, and you're already seeing gold in the strongest uptrend of all time. It's not closed yet, but gold futures are on pace to close December higher for the 12th consecutive month, which has never happened before, Jason. Never, ever. We were just on a call before we jumped on here with our analyst team, and we talked about precious metals for like the first half of our meeting because, it's such an amazing trade right now. And some people mentioned that you're seeing it historically overbought readings in precious metals. It's not just gold, but silver as well. The momentum is super duper overbought, and that is kind of concerning, but I don't want to overthink that. The price just continues to make new all-time highs, and I don't want to fight the tape. I don't want to overthink this trend because this is the strongest primary uptrend we've ever seen in gold futures. What do you think, Jason? I know you're just a trend follower, so I think you'll agree with me there, but does the extreme overbought condition concern you at all?
No, not at all. Stay long. I don't give a shit at all, honestly. Like I don't.
I love that
You know,
answer.
it's a when things are breaking out and making new highs, like I'm just going to be long it. Like I know we could all speculate, like every single time gold consolidates or something happens, or everybody writes in and tells me about how silly it is to be long gold and how it's going to stop, and you just don't know when a trend's going to end. And also go back to the last chart, Sam. So you just don't know when a trend's going to end, and we're in the right environment for that as well. Also, give it up for Sam. Like he sometimes I do these charts and I'm like, this is a good chart, and Sam takes the chart and makes it so much better. So like I appreciate that about you. But Sam does this all the time, and I'm like, man, I can't even do what Sam does. It's great. But so when we're looking at this, it's the same thing. We're looking at this great monetary environment, and somebody in the chat, I think it was Mark, mentioned 1980s. So when we're looking at the 1980s, you also saw this similar type of setup in the yield curve, like these deep inversions. Like this was one of the deepest inversions on record, and everybody was like, "It's the deepest inversion ever." So if you look at the last one that happened after 2020, that bottom green line that's drawing that bottom out there, that was a very deep inversion of the yield curve. We also saw those inversions in the 70s. That's the last time you can look back and see something that's that inverted. So as we come out of those types of inversion, we do see these massive inflationary cycles that tend to happen, and I think we're probably in the place for that too. Now, if we're looking at to answer the other part of his question, the Fed would lower rates or raise rates quickly, or I think he was talking about raising rates quickly. They'd raise rate quickly because that's what they did in 80, 82. Yes, but okay, that's bypassing the whole 1970s. Like that's just saying there wasn't, we just got to that endpoint. Like no, we had the 1970s, which was the stagflationary cycle. All of these things went up. Silver topped in 1980. So we're in that type of environment today where we should continue to see the yield curve come out of inversion, more easy money coming in the market, the dollar continuing to get weaker. Yes, it'll go in stages. It's not just going to go, the dollar isn't going to go straight down and gold isn't going to go straight up every single day. It has monthly, but that probably won't last forever. But in the long run, this is a bull market. Don't do anything. Stay long, just as Sam was talking about. And for me, I'm just running a trailing stop. And if it hits an exit signal, which is like a 60-day low or something, great. If not, I'm just going to stay long and not overthink it. You don't know when the trend ends.
Totally, Jason. And it's the same story for silver futures. It's come a long ways in a short amount of time, but it just keeps making new highs. So I don't want to fight these new highs. I want to stay long silver futures and just, as you said, trail it with a stop. And Jason, you brought along this interesting chart of silver relative to oil, or I guess it's the other way around. You have oil in the numerator, silver in
Yep.
the denominator, and you threw this chart at me earlier in the week, and you know I don't know how helpful this is, Jason. To me, it just seems like silver is driving this ratio, and I don't really think there's much of a signal here for oil. Do you disagree with that? Do you think
I
there is a signal here and oil is tremendously undervalued and it's going to have a nice mean reversion move higher relative to silver and other precious metals?
So the relative move, yes. However, I don't think silver is stopping. Like, I think it might calm down. Like, this is the thing about the silver market. It doesn't just like it's going straight up a lot. And once again, just going to stay long. I'm not going to overthink it. And when it hits trailing stop, great, I'll get out. But I do think that there's a point where it's just very similar to what we talked about gold earlier this year, where we're like, okay, gold should slow down and silver should start outpacing it. We've been talking about that all year long, or sorry, for the last 2 years. Then it happens this year, and it'll look very similar to the silver situation, where it's not that I think silver is going to go down. I just think silver is not going to go up as much as oil probably going forwards. Now, what's the timing for that? I'm not sure. I'm not sure just yet, but it's going to happen at some point within the next year, most likely, is how the cycle usually works. Once again, I'm not saying go out and buy the crap out of silver here. I am saying, or sorry, buy the crap out of oil here. I am saying, like, be open to that fact of this shifting. Doesn't mean I'm selling any of my silver stocks, silver miners, whatever. I'm staying long, all that stuff. But I'm willing to be open to taking buy signals in things like energy and energy stocks going forward. So I think this is actually helpful. At the very least, it's just kind of shocking to see when silver's all the way at $60. Like back in the day, that made a little bit more sense. You know, silver got up quite a bit. Oil being around 50 a barrel with inflation makes a lot of sense. But now today, looking at it and going, silver's at $60. Oil is still at $60. I mean, back in 80, that would have been 50 and 50. This is many years later. We have a lot more inflation. Oil is still used. People go, oil's not used anymore. It's used. It's used pretty
Yeah,
heavily. it's
it's never been used more,
Yeah,
actually.
it's never been used more actually. So I think that we're just looking at this going, okay, there's a possibility here of this. Doesn't mean change anything, doesn't mean do anything differently. It just means be open to buying some energy stocks as they come into play.
Totally. And as I've mentioned multiple times, we have some amazing energy charts to get to later, but let's talk about platinum. We were on a Twitter Spaces earlier this week, Jason, and someone asked, would you rather own gold and silver or platinum and palladium? And this harkens back to what we were talking about earlier. You have those extreme overbought conditions in gold and silver, and you have overbought conditions in platinum and palladium, but they're nowhere near as extreme as gold and silver. So this person was kind of making the case that the upside was limited in the gold and silver, and there was a big move coming for platinum and palladium relative to the former. So I made this chart as I was thinking about this question, and it seems clear as day to me, Jason, that you just want to own the leaders, the gold and the silver. And you have gold and silver relative to platinum and palladium ripping to new all-time highs, climbing out of this massive accumulation pattern and exceeding this 1985 peak. So it seems very obvious to me that you want to continue to own the leaders in the precious metals. And I'm not sure what happened with Jason, but he has dropped off the stream. So you're stuck with me here, but we have some more charts to get to, including one of my favorite, probably not my very favorite, but it's certainly up there in terms of risk appetite indicators in precious metals, and that is the junior gold miners relative to the big gold miners. That is GDXJ relative to GDX. And you can see it's trying to climb out of this textbook bearish to bullish reversal pattern. And it's attempted this multiple times, but it's failed miserably each time, gotten rejected twice, and now it's back at the scene of the crime for the third time. And I think this is the time for junior gold miners to outperform gold miners. I think this ratio is about to break out to new 52-week highs, and this is just it not only tells you that you should favor the smaller miners, the more speculative names relative to names like Agnico Eagle and Newmont, but it also it's risk appetite in the market, in true healthy precious metal bull markets. You see risk appetite. You see investors reach for the riskier instruments, things like silver relative to gold. You see them reach for the smaller miners relative to the bigger ones because they want more returns. That is what you see in a bull market. It's akin to seeing the ARK universe outperform in a bull market relative to things like Apple and the big technology stocks. That's how I think about it, really. So yeah, I continue to find bullish evidence in precious metals. It's not just the new highs in the silver and the setup and the gold and new highs in platinum and palladium, but the key risk appetite ratios are suggesting further strength in precious metals. And it's also base and industrial metals that are working tremendously well. You don't just have copper breaking out to all-time highs like we were talking about earlier, but you have steel stocks ripping to fresh multi-decade highs. And I really like the setup in aluminum as well. Look at something like, I don't have the chart along with me, but for your gamers at home, look at something like Alcoa. This is like the largest. This is like the Newmont mines of aluminum. And man, look at that setup. Zoom out on that chart. Look at the shelf of former highs. It's breaking out above. I think base and industrial metals are the place to be right now, in addition to precious metals as well. But man, the setup is amazing here. I love the base and industrial metals trade. And as we promised earlier, we have some energy charts to get to. So I have this chart and one more to finish today's show. So this is the equally weighted basket of futures contracts that we have. So it has crude oil, it has heating oil, it has gasoline and natural gas. And if you look at a chart of crude oil or heating oil or gasoline by itself, it looks not like this. But when you combine them all together, you get a different picture. And this tells a much more constructive story. This looks much more like an accumulation pattern, just a big sloppy range after a prolonged downtrend. So to me, it just seems like the path of least resistance for energy futures themselves is sideways right now. It's not down like we were talking about earlier. It's bad risk reward in my opinion to be shorting crude oil down here. I think the odds are that you get an upside move. I think the risk is very much to the upside with energy futures. Frey Lee asks if the ticker is AA for the Alcoa. That is absolutely correct. The double A battery, if you will. Jason is back in the house. All right, he's alive and well. I was worried about you, Jason.
I'm good, man. Solar generator. We're good. We're ready to go.
Okay,
We're ready to
cool,
go.
cool. Well, you missed some good charts there.
Oh, I know. I mean,
You
I
made it
got to
back
see
for
the
the
deck.
last chart of the day. So
Perfect.
this is what I have for an equal weight basket of energy, equipment, and services names. You can see all the tickers that I included here in the bottom right of the chart. But man, if you look at something like, is it OIH? Look at OIH. It doesn't really look like this. That is very much a market cap weighted index. Let me pull up the holdings right now of OIH. I think you'll have a large overweight to the names that are not performing so well. So I have it pulled up here, and yeah, man, you have the old Schlumberger, the SLB, they renamed themselves. It's almost 20% of OIH. And you have Baker Hughes at 11%. So yeah, very much a market cap weighted ETF is the OIH. So this equally weighted view gives you a very different story. This looks like a massive base on base structure, and I think new highs are on the horizon for the services stocks and energy, which are among some of the most risk on stocks in all of energy. So, you see the ugly looking charts in the energy futures themselves, but when you look at the stocks, they tell a very, very different story. There's a massive divergence there. So I guess the question really is, Jason, who do you want to trust? The futures market or the stock market?
Yeah, and most of the time when we see these type of stocks moving, it's very similar to like when we're looking at gold and going, okay, gold's lagging, gold miners are leading. Like people write every time I say that, somebody writes me and they go, well, gold miners were actually down today. Look, I don't care about a 1 day move. Look year to date. Look at the full year. Look at the last 6 months, something like that. Those numbers matter. And if we're looking at gold miners and they're at what, I mean, I looked yesterday at the returns and we were up like 165% in GDXJ or something. I mean, it's just wild. So you're seeing these absolutely wild moves in gold miners compared to gold, and that's telling you it's a risk on market. We're seeing a similar setup in energy currently, but at the same time, if
Not
we look at
150% in a year, though.
nowhere near that. Well, the divergence might be that big, you
Right.
know, like
Fair
like
point.
generally, but at the same time, it's not. We want to see oil move into an uptrend to really say, okay, this is good because these companies are going to make a lot more oil if oil is priced higher. And one thing I wanted to answer too is a question I saw from Jack earlier So people who understand the commodity cycle or don't understand the commodity cycle, let me talk this through a little bit because I think it'll make more sense to everybody. When you're at these very low prices, like let's say it's COVID's a great example. We got COVID. Nobody in the world is looking for oil at that point. Nobody. To the point where all these ships actually had to try to store all this oil, and oil prices actually went negative because of it. So nobody's looking for oil. There's oversupply. There's all these things happening, and right around that time is when oil usually bottoms. Nobody's looking for oil. And then if we think of something like silver, silver's way up high. What, $65 around that zone today. If we're around $65, there's probably a lot of people looking for silver currently. So this is how the cycle works, and this creates those oversupply periods. They don't happen immediately, which is why you get these big moves and they're great trends. But at some point, when you have very high prices, everybody in the world's looking for that good or that commodity, and that creates the supply oversupply period, and then the price actually goes down again. So the commodity cycle works that way almost every single time in every single commodity across the board. Currently, oil is at a point where nobody's really looking for it. Nobody cares about it. There's a lot better things that you'd want to be mining out of the ground at the moment, and they're doing it for metals and mining. And that usually brings the next part of the cycle when you still have to use a lot of oil. You still have to use a lot of energy to get these metals out of the ground. So at some point, that price starts to move in oil and things like gasoline, heating oil, energy stocks. These will start to move as well. So, we just keep putting this on your radar. It's not the fact that we're going, hey, fully bull up on oil today. We're going, these stocks look really good. And there's something happening here that we need to keep paying attention to. And when they happen, Gold Rush members, you will get plenty of buy signals and all of these things. But yeah, definitely a lot going on in the commodities market. Excited to talk with with Sam about it all year long next year. It's going to be a lot of fun.
Totally. Yeah. So if you want more of our information and specific trade ideas from All Star Charts Gold Rush, you can check out the link in the description. We cover everything from commodities to currencies to bonds. Every week we're writing about precious metals and the best setups in the mining stocks. And on Fridays we're covering energy and the best setups in energy. And yeah, we do it all, and we are here to make you a lot of money. So if you want to learn more about what we do at All Star Charts Gold Rush, you can click the link in the YouTube description. And thank you everyone for being here very much. We have DPS in the chat, Mark Noller, ASAP Jack, Frey Lee, Wavy McFly. Thank you for being here, all of you, very much. We will be back again at the same time, same place next week. Or will we, Jason?
Oh,
Is
is it
next Thursday
Christmas?
Christmas?
Is it? Yeah, I don't pay attention to these things.
Let me check my calendar. I don't know. Yeah,
Uh,
next Thursday is Christmas. Man, I hadn't even thought about that.
the
What should
Gold
we
Rush
do, guys?
Christmas,
Chime in on the chat. Should we go live on Christmas Day?
the Gold Rush Christmas special, man.
Yeah,
I
yeah. We
mean,
can talk about coal.
yeah.
Maybe Santa Claus brought me some coal.
If you
Yeah,
guys
that
are
would be
down,
cool.
I'm down to go on. I'm always down. So we'll see. We'll
We did
see.
it on Thanksgiving,
We
so
did. Yeah.
why not Christmas?
Yeah. Hey, I'm into the holiday videos, so I'm always trying to trade the markets, and I'm more excited to talk about the markets when the markets are even closed. So I'm excited to do it. We should probably do that.
Totally. All right. We will see you all later. Thank you for being here. And if we don't speak to you again, have a happy holiday and make sure you spend lots of time with your family. Family's important.
Absolutely. Later,
All
guys.
right. Adios, everyone.